Welcome to Invest. We talk about investing, finance, and professional development. So I've been brainstorming, and I actually had a couple of calls and consultation with my Patreon members today. And a good question arose during my brainstorming session, and also when I was looking into my comment section below as well. In this downturn, and knowing the fact that it will be, not the most likely that we'll see a mega surge going forward. And despite, it's good to be holding for long term, which is the way I typically like to invest anyways, during the downturn, for the dollar cost average. Knowing the fact that we might have a high propensity of trading sideways going forward, it would be logical for us to maybe, in a small percentage of your portfolio to allocate towards swing trading, right? So how does that work, right? With respect to the technical analysis that we perform on a day-to-day basis, you could see that clearly we have, the levels that we have broken down, that it's either we're going to consolidate around there or levitate between the levels, right? So for example, Ethereum right now, we are clearly down about 7.6%, but we're also levitating between the level of 2000 and 1860. The level we're at right now is not a real level, right? So in terms of how do you swing trade, right? So what you typically do, in terms of swing trading a crypto, would be looking into the chart, right? Well, firstly, we understand that the level that we're at right now is levitation, right? So as you keep an eye out on the current level, the propensity of knowing the fact that you're levitating is more likely to go down to 1860, right? So now you triangulate that with the RSI and the MACD, you could see that RSI is highly oversold right now, right? So it's logical to start putting some limit order around the current level all the way down to 1860, right? And what you do is basically you buy in as you are submerged at this level right now. And then you look out for the swing up, right? So ideally, based on historical levels, right, it's probably not the most probable for us to reach above 45 or 49 out of 70 on the RSI scale. The reason I say 49 is because it's at the cusp of moving on to 50, which is the halfway optimal point. It's very typical that you see consolidation happens around the 50 mark. If you look into it, right, you can see that happens on the 11th of April, that happens on the 16th, that happens on 25th. So it's a very, very, it's almost like a war, like a blockade of resistance that you struggle around between the bears and the bulls around that level, right? So you buy when it's on a dip, right, and you sell when it's on the a proximity of 45 or 49 or 50 out of 70, knowing the fact that it will be unlikely unless we obviously get over the hurdle going forward, right? And to do that, you obviously need to have some good level of mental concentration. You need to look into the chart, right? Firstly, identify the levels of where we're going down to or where we're going up to next, right? And if you identify it correctly, you could swing trade this quite strategically, right? You buy at the current level at 1860, and based on the level of setup, right, you could either sell on 2000 or sell on 2150, depending on your risk tolerance, right? If you want to have a lower risk tolerance, 2000, higher risk tolerance would be 2150, and you do that continuously, right, based on the setup of the RSI and the MACD, right? Because right now we're in a downtrend, and it's gonna take some time until we get back up into the bullish channel. So swing trading for an asset that you believe in a long term will make a lot of sense, right? I don't advise swing trading with an asset that you don't believe in the long term, because let's say you make a mistake on the swing, right, and you lose the money at that short-term perspective, right? It will take some time for you to get it back up, right? So if you're buying into an asset that's highly volatile and with lack of substantive, value proposition that is, that can be lasting for long term, that can be detrimental to you for the long term, right? You ultimately have to swing trade with an asset that you believe in the long term. Another good asset that you could swing trade is with Tesla, right? Using the same methodology that we talked about, right? Swinging between the levels that we identify. And by doing that with like assets that you believe in the long term, it'll keep your sanity, number one, but also keep you, on your tippy toes with respect to understanding the dynamic or the dynamism of the market, right? So hopefully this makes sense. Let me know if you have any questions, and for those that want to have more tutorial, feel free to subscribe to my Patreon. I'm happy to give you more of a one-on-one tutorial. So let me know. Hopefully this is helpful. I appreciate you. Take care. Bye.